Good morning, everybody, and welcome to Canadian Mortgage Weekly. Today's episode is number 51. We're coming off of a big week last week as Joe celebrated 11 years in the industry. So again, thanks for joining us this morning, Joe, and how are you today?
Oh, thanks very much, Sam. I'm doing well. Yeah, 11 years. Thanks for reminding me of that. 11 years in the mortgage industry has gone by really quickly. But it's great to still be here and to be able to share my experience here on Canadian Mortgage Weekly. And I'm excited to dive into today's show. But before we do that, it's great to be on here. Hi, everyone. And how are you doing, Sam?
Yeah, I've been doing great. Surviving all the snow that we have here in
Yeah.
Barrie. It's definitely starting to feel, more like Christmas. Trying to get my Christmas shopping, managed well, but thanks to Amazon's 2-day, 1-day shipping, it's been all right.
Yeah, really. Hey, with the Amazon shipping, and it seems like all the shipping is really quick these days. You're right, though, because I just ordered something on the weekend and I saw that it already had a shipping notification and that it was already on its way this morning. And I'm thinking, what? That is very fast. The speed that the shipping happens these days from when you order it is night and day from when it was when online shipping first started, I feel.
Yeah, that's right. It's definitely been a savior when you're in those kind of last minute moments thinking, you got to get ready and get your gifts all together. So
Exactly. Well, with today's episode, I'm really excited because we're going to be going over some financial metrics that we have started to cover here on Canadian Mortgage Weekly. And we want to track them with you all. So with the first one in mind, we want to just take a look at the bond yield and how that will affect mortgage rates and where it's at these days. And Sam, as you know, we've covered the bond yield here on Canadian Mortgage Weekly quite often and how it affects fixed rates.
That's right. Yeah, we often, try and keep a pace or a pulse, on, where the bond yield is at to try and give you guys an idea of, where we feel like the market is headed and what you can expect from the 5-year fixed rate.
Yeah. And with that in mind, the bond yield has been trending upwards these past few months. However, in the last, few days, we have seen a slight drop in the bond yield, which may indicate that we may see some softening of 5-year fixed rates. However, it's still trending up. So if there's any softening, it could be short-lived, depending on what we see in the next few weeks as the bond yield keeps going up or down. It really depends a lot on the market, what's happening with the stock market. We noticed that the bond yield going down was coinciding with the Black Friday stock markets going down, coinciding with the variant concerns. So it's all sort of related. So we'll keep you posted here on Canadian Mortgage Weekly. Sam and I will keep you updated. We'll see what's happening next week. But for now, really probably no change going forward. And moving on, we have the CDOR rate, so the CDOR rate. And Sam, that really hasn't changed since last week, hasn't it?
No, it hasn't. It is actually the same, which is a good indication, and it's meaning, we can say that it's still a good option to go with the variable rate. We've been monitoring, the Bank of Canada's announcements, matched with, what the CDOR rate is. And given that it's the same as it was when we had last reported, it's still looking again like a good time to get in to a variable rate. I mean, I feel like we keep mentioning it, but the gap just keeps growing between variable and fixed as that fixed rate's climbing. So I mean, yeah, it's definitely an enticing option to go with the variable rate.
It really is, yes. About a third of the Canadians are doing it right now from what we are seeing in the news. And with what we're seeing, that's about right. It also allows a lot of flexibility. If you take a variable rate mortgage, you typically have a much lower penalty involved, and you can make changes in your mortgage going forward at much lower cost. But you do have that caveat of if rates do go up like they're talking in the spring of 2022, that your payment could go up $50 to $100 per month, depending on the size of your mortgage. So, but you are starting out with a much lower payment right now too at the same time.
Right.
So you're guaranteeing a lot of those savings right up front. But we'll see how that works out, because if any of you are interested and concerned about where interest rates are going, I know Sam and I have a real special show planned for you next week on December the 8th, which will be the Canadian mortgage interest rate announcements by the Bank of Canada.
Yeah, that's right. It's always, I find a good opportunity to share, what the Bank of Canada's plan is, but almost more interesting is to hear and see what their comments are moving forward. I know it's, they give a bit of an indication of where the economy's at, what they're sort of, I think we've seen them change their timeline a little bit between, one announcement to the next. But again, they left us on the last announcement that we're looking around April to June of next year when they'll start increasing, that overnight rate. So yes, we will have a very special episode for you on Wednesday covering that. If you have a variable rate mortgage, car loan, line of credit, whatever it is, we'll give you the update on what the Bank of Canada has for us.
Fantastic. Yeah, it'll be really good to share that information with you all, and look forward to that next week. I guess we can give some sort of prediction, and that's based on what we're seeing. I think my personal prediction, I don't know about you, Sam, but I think there's going to be a stay on the rates for now, and that we'll probably not see any increase until next year. And I think this is the final rate announcement of 2021 now that I'm also looking at that. So that's quite an interesting moment to mark as well.
Yeah, absolutely. I mean, I think you're completely right. I know that in the past, 7, because they do it 8 times a year, the past 7 rate announcements, they have all stayed the same. So as you're saying, I think the Bank of Canada will finish off the year just keeping it where it is, which again does buy you some time if you want to get into a variable rate loan. I know we've chatted before about having a rate under 2% means that so much of your initial payment is going towards principal. And at the beginning of your mortgage is where you want, the most of your money to go towards principal. So everything's looking good as we, enter into the close of 2021.
Great. That's great. So moving from rates and from the rate announcement, let's just quickly cover off the current national house price. Still sitting at $716,585 for an average price home in Canada. Much higher than it was a few years ago. Currently, we are seeing a average family income of $125,000 required to qualify for an average price home. So it's not impossible to obtain. However, it seems like it's pretty much impossible to obtain unless both parents are working, which is hard, but it is possible to obtain. Well, if you are not able to obtain that, then we also can add a temporary cosigner and look at other options, that kind of stuff as well. But we'll see where this national house price average goes from here going into 2022. But as we cover off those items, we just wanted to dive into the spotlight of the topic this week. And that's, when you're looking at buying a home, a lot of the times we can get wrapped up in the emotion of it. And we want to put in a firm offer to make sure that no one else is going to get this home, especially in this market where, Sam, we're seeing a lot of competition happening.
We are, and I know that tends to be, the realtor's solution to multi-bid situations is presenting the most appealing offer, which, we do see currently a lot of that. What makes it appealing tends to be going with a firm offer, and by firm we're meaning no condition on financing, where we still have a window to get it looked at with the lender.
That's a really scary place to be, putting in a firm offer, especially if you don't have any sort of pre-approval or conversation with your mortgage professional. If you are in a situation where you are looking for a home, we definitely recommend that you speak to your mortgage professional, or myself, Sam, or Terry Lynn, to be able to see where you stand financially before you put in a firm offer. Because at the end of the day, there are situations that when you put in a firm offer that we have heard of in our industry that can happen if things go south. And one of those items, Sam, as you know, it's if you overpay for a home and then the bank requests an appraisal, then
Right.
sometimes, it's hard for that bank to then make the justification to lend on that full amount that you're purchasing the home for.
Yeah,
Yeah.
that's right.
Yeah. But anyway, so that's one of the caveats. There's other issues that could creep up if you do purchase a home firm and it just doesn't work out. For example, if you have not been pre-approved and the lender sees that you might not qualify for this type of home, then you could be left in a situation where you can't close on the home and you might have to find some way out of your contract, which could cost you illegal fees or something like that, which we don't want you ever to run into.
Yeah, absolutely. I think it's important to note, that you have that conversation with your mortgage agent, whether it's Joe, myself, Terry Lynn, but even running numbers or having a realtor send us numbers for properties so that we can, reassess and maybe give you some confidence into, looking at the numbers a bit more tightly to make sure that the financing does work and we don't spot any issues that the lender might notice to, trigger one of these, negative caveats.
Yeah, exactly. We're here to be able to help you walk you through your purchase. So if you're looking at doing a firm offer and also want to make sure at the same time that you are protected and that you have backup solutions in case it doesn't work out, then there's also other companies out there that will be able to place a sort of insurance policy over the whole thing. So you will be able to close on that home no matter what happens. And if you are looking for solutions like that, perhaps you yourself are in an offer situation where you've put in a firm offer and you cannot close on a home, give Sam, myself, or Terry Lynn a call, and we can help you walk you through that situation yourself. Perhaps there's another way through it. And there's obviously companies out there that can help you through it as well. Anyway, I'd like to take this opportunity to introduce Sam Thompson. Sam's a mortgage agent with Mega Mortgage. He's been with Mega Mortgage now for 1 year and 3 quarters. Originally moved from Ottawa area to Barrie. Sam, welcome to the show today, episode 51. It's been great having you here on all 51 episodes on Canadian Mortgage Weekly. So how are you today?
Yeah, I'm doing great. Thanks for having me on today's episode. Like you're saying, we've been on all 51 together. So it's been, it's been awesome thinking about all of the content that we've been able to cover. And, today was no different. And for anybody who does not know Joe Bladek, again, he had just finished just achieved 11 years in the industry as of last week. And Joe is a mortgage broker in the Aurelia area, but again, serving all of Ontario. So again, it's always great to be on these episodes with you, Joe. So thanks for having me.
Thanks very much, Sam. Appreciate that introduction. And for all you out there, if you are interested in connecting with us, give us a shout on Facebook, social media, wherever you're at. Share our videos and comment below. And watch out for next week's video because we will be doing our rate announcement on Wednesday, December the 8th, as well as our regular scheduled episode on Thursday, December the 9th, which will be 5 tips to keep your credit score high during the December holidays. So don't forget to join us then. And Sam and I will have a good episode planned for you then. All right. See you.